Hello, everyone, and thank you so much for joining us today. My name is Katie Ingersoll, and I'm the Programs Director for SMU Data Arts. I also want to take a moment to introduce my colleague, Eamon Dougherty, who is a Senior Support Center Specialist at SMU Data Arts. He'll be facilitating and managing our chat and Q&A during today's sessions. So before we jump in, I do want to start with some housekeeping notes. Throughout the webinar today, you can use the Q&A feature to ask any questions you have about the content. As I said, Eamon will be keeping an eye on those questions. He will address your questions as I present if it makes sense, or he'll hold the questions for the end if there's something that it would be better for us to talk about at the end. But you can go ahead and put questions in the Q&A at any time throughout the presentation. You can also use the chat feature to reach out to us at any time if you need assistance with the Zoom technology or any other kind of assistance from our team. And for anyone who would like to activate the closed captioning feature, that is available to you. You can simply click the CC icon at the bottom of your Zoom screen. You may be prompted to view closed captioning by live feed or by transcript. After the session, we will send you a follow-up email with a couple of resources related to the presentation. We will send a link to a recording of the webinar as well as the slides so that you can review those materials or you can share them with others who may not be able to attend today. We'll also send you a brief survey to get your feedback about the presentation. You'll also see that survey as you close your browser window at the end. We would love any feedback that you have. And finally, I do just want to start by noting that all of the information I'm going to be sharing today is for new organizations, for unaudited organizations and organizations with small budgets. That's true of the session that we did last week about budgeting and today's session. So these sessions are really geared at folks who are less familiar or even completely unfamiliar with nonprofit financial management. So all this to say that the material I'm going to present is basic on purpose. If you're not one of those people, you're welcome to stay. I hope you'll be able to fill in a few gaps in your financial knowledge, or maybe you know someone who might benefit from this information. But just so you have an idea of kind of what we're going to be covering today. I just wanted to give you that heads up. Great, let's go ahead and get started. So although your work revolves around creativity and culture and in the arts sector and the cultural sector, understanding how finances work is key to successfully managing your day-to-day activities and planning for your organization's future. In our last session, Monica touched on some questions that you might be asking about your work, such as how do you record all the personal contributions you make to your organization or project? How much will it cost if you offer online programs again next year instead of in-person programs? How much should you charge for those online programs? And if you don't charge a fee, how will you cover your costs? Hopefully last week it started to become clear how an annual budgeting process is a really important step you can take to make it easier to answer some of these questions. There are multiple ways that data is used for financial management, ranging from how you keep track of the data in the first place to the various reports, your board reviews at every meeting, to the different ways you can use that data for planning and strategy. We like to think of these different ways of using financial data as building blocks for financial health. Tools, methods, and best practices you can use to help get your organization on solid financial footing and stay there. In our last session, we talked about the building block of budgeting with Monica. Today's session will focus on a couple of equally important building blocks: organizing your financial data and building and modifying a chart of accounts. Before we jump into that, however, I know that most of you know about Data Arts and the CDP, but for those of you who don't, here's a brief overview of our organization. So SMU Data Arts is a program of the Meadow School of the Arts at Southern Methodist University. Here you can see a little bit about what we do. We build capacity for data use in the sector, which is what today's webinar is all about. We collect high quality longitudinal data on the sector. Some of you may fill out our cultural data profile, which we use to collect data for research and grant reporting. We develop data collection methods to respond to evolving sector needs. And we provide insight from the data that people can use. So here are our goals for today's session. By the end of today, I hope that you will understand the importance of financial data organization, know what a chart of accounts is, and how to create and modify your chart of accounts to best suit your organization, and leave with resources on these topics to explore on your own or with other staff and board members at your organization. So you all come to this workshop with different roles at your organization, different missions, different capacities, but with few exceptions, no matter what your role is, your job most likely intersects with your organization's finances in some way. I am actually curious for those of you who are here with us today, what you do at your organization. We always get folks in a variety of different positions. So if you feel so inclined, I would love to invite you to just introduce yourself in the chat. You can just share, what your position is at your organization. And we'll just see who we have here. Sometimes we have anyone ranging from office managers to board members. So we'll see who's in the room with us today, but you might be a board member who has fiduciary responsibilities for the organization, or a person who does all the financial data entry. You might be a bookkeeper. You might be a program manager who looks at financial reports on a regular basis, or you might be running a one-person shop. You might be doing everything. And I do see we have a lot of executive directors and some bookkeepers here, so it really does run the range. So thank you for joining us today. But no matter what your role is, because your work touches on the financial side of the organization in some way, the overarching goal of this and many data arts workshops is to help you understand and embrace financial data and financial processes. So let's get into it. So to begin, I want to talk briefly about the idea of financial data organization. What do I mean when I say that? I know it sounds so exciting, but you know what financial data is, right? It's the information about all of the money that comes in or goes out of your organization in a very basic level. All this information should be recorded somewhere in detail, including dollar amounts, why you got the money or how you spent the money, and the impact of all these ins and outs on your bank account as well. The organization part of financial data organization is not just thinking about the amounts, but also the when of your recording financial information, where you're storing that information, and how you're recording the information, including the level of detail you use as you record all that data. The ultimate goal is that all of your financial information should be accurate, findable, and useful to you later on. So we all know that in theory, it's a good idea to keep track of financial data, but it's also time consuming when you have a ton of other things to do every day. This is something that comes up for me a lot at home. Maybe this happens to you. There's always this moment when I'm looking for something, a piece of paper I need to pay a bill, and I know I've seen it, but I can't put my hands on it. And so I spend hours looking for it when my to-do list is already very long. If only I'd put it where it belongs and organized it instead of randomly dropping it somewhere when I got it, I could use the time I spent searching on something more useful. This same thing will happen at work. It might be something like a board member calling you up. They might tell you they're going to an event and they'll see a donor who used to give to your organization, and they want to make sure they know the donor's giving history before the event so they can have an informed discussion if the organization should come up. This is, of course, the call that everyone dreams of getting from their board members wanting to solicit donations at events they're going to. And if your data is well organized, current, and sufficiently detailed, finding that information could be as simple as running a report in your accounting software or doing a sort in your contribution spreadsheet. But if your data is in disarray or not detailed enough or not entered anywhere at all, you either have to rely on your memory or spend a lot of time wading through old emails and canceled checks, finding the information you need, if you can find it at all. Now, we could find a lot of examples like this as you run your organization, but overall, organized financial data will help you find information quickly, answer questions, and produce reports that will help you answer questions about your organization and manage your finances better. In the end, I know this sounds counterintuitive, but it's because you're busy that it's actually worth taking the time to keep your financial data organized and up to date. It's so you can find things when you need them and then move on to more pressing tasks and high priority projects. So let's talk about a few elements of financial data organization. So as your organization fiscal year progresses, you're just doing your work, right? Probably most of your energy is going towards that work. Money comes in and money goes out of your organization. Every time that happens, there's a financial transaction or what we might call an accounting event. So anything like a ticket purchase, someone paying a workshop fee, or you going online and buying supplies for that workshop. Every financial transaction that takes place has to be written down and recorded in some way. Let's talk about record keeping best practices. So you may have financial information captured in various places. You may get it in the form of receipts or bank statements. You may have invoices sent to you via email. And now that many of us are working at home, you may have some electronic and paper records at home or at your office. Ideally, the goal is that all of that information needs to be collected into a single place. One place for paper records, one file for digital records and scans, and one accounting system. Just getting into the habit of recording all of your financial information in a spreadsheet as it comes in is a great way to start on your journey to good financial management, even if you don't have accounting software or something more complicated. As your organization grows, you might consider free or low-cost accounting software to help you easily generate financial reports. Or if you're using accounting software, you might be here to think about how you can organize it better. The reason why all of this is critical is because you can't use or learn from your financial information if you can't find it. So you want to work towards a single system that everyone uses, whether one person does all of the data entry or multiple people have access to a secure online spreadsheet or online accounting software. However you choose to record the data, it's best to record all financial information as soon as possible after the accounting event. But we know the reality that's not always possible. Maybe you don't have the volume of financial activity such that it makes sense to stop all other work and do a small amount of data entry. Or maybe you have an all volunteer organization where the treasurer might be fully employed doing something else during the day. They might be doing your bookkeeping once a week or even once a month. So it just can't happen immediately. If this sounds like a familiar situation to you, instead of processing every financial transaction immediately after the event takes place, collect all the financial documentation in one place as soon as you receive or generate it. Before you walk away from it, think about the minimum information that someone not intimately familiar with your organization would need to record it, like what the expense was for or why you got a check. And jot that information down on a note to accompany the records, even if it's just a post-it or a note you put in an email. Make sure you jot this down before you go on to something else. This way, you or whoever does your bookkeeping, even if it's you later on, can work on recording those transactions later, and the key information won't be lost just because time has gone by. If you have several people or staff who make purchases or receive checks, consider using standard forms anytime someone needs to make a financial transaction so that all these details are collected in the same way. If you're all working in the same office, this could be a piece of paper that everyone fills out when they make a financial transaction. It could be a standard set of questions they answer in an email to send to one person to track later, or it could even be an online form you set up. You might use this for purchase orders, check requests, or expense reports, for example. Whether you record all financial transactions right away or do it weekly or on any other schedule, how you need to use that data later on to determine how you record it up front. I'll touch on this idea throughout the rest of this webinar. So I know several of you probably attended our webinar last week when we talked about the budget process. We also do have a recording of that webinar we'll send out after the session if you'd like to review it. But the budget process is just basically how to think through and write down the financial implications of all the things that you do, your programs, the people you work with, the places where you work, as well as all of your organizational goals for the coming year. And based on all of that, you come up with a budget. That's what Monica walked through last week. But a budget is only the beginning of a process on the road to financial organization. Monica mentioned last time that once you have budget lines in place for your organization, the next step is to use those same lines and categories as you're doing your accounting all year long. This is where the chart of accounts comes into play. A chart of accounts helps you translate between your budget, which we're looking at here, and your accounting system. So what is a chart of accounts? A chart of accounts is a list of all of the ways money flows into your organization, all of the ways you spend money, all of the ways you store your organization's capital. That might be something as simple as a bank account or something more complicated like investments. And all of the ways you borrow capital, like loans you might take out, as well as your organization's overall net worth. Put another way, it's a list of accounts that are available to record those financial transactions we talked about. So if we think about a sample chart of accounts here, every time you record a financial transaction, at least two accounts on the long list that makes up your chart of accounts are affected. So for example, when you receive a donation and deposit the check in the bank, you have an individual contribution and the cash in your bank account increases. So kind of two things are happening. Those two things, individual contributions and your general checking account, are two lines on your organization's chart of accounts. You can create a chart of accounts in an Excel spreadsheet or even a Word document. And whether or not you know it, if you use accounting software, there is a chart of accounts behind the scenes that drives all of your data entry choices. All of these can be modified to suit your organization. So let's review the elements of a chart of accounts. At a minimum, each line must contain 3 elements: a name, sometimes referred to as a general ledger account or simply an account; an account number or account code that helps keep your accounts organized; and an account type. This is simply going to tell you whether it's a revenue or expense account or a few other types that we'll talk about in a second. Now, even if some of these account names seems pretty self-explanatory, you might feel like you know what you mean when you say ticket sales, you may find it useful to add some additional details like a brief description of the account, especially if multiple people will be using your chart of accounts. You could even add additional accounting details like which financial statement the account flows into. There are 5 main account types on a chart of accounts. We have assets, which is everything your organization owns. For example, the money you have saved in the bank. Liabilities, which is everything your organization owes. If you have any outstanding bills you need to pay, for example. Net assets, also called equity in for-profit terms. Revenue and expenses. Those last 2 are probably the most familiar, but all these are part of your chart of accounts. All of the lines in your chart of accounts are going to fall into one of these basic account types. The account number associated with each line in your chart of accounts might be a simple string of a few digits or a longer multi-segmented number. The main account number usually has 4 or 5 digits, depending on the complexity of your organization. And you can assign the numbers in any way you like, but often asset categories will start with 1, liabilities will start with 2, net assets will start with the number 3, revenue will start with 4, and expenses will start with numbers 5 through 9. So again, you can organize your chart of accounts any way you like, but this is a very typical way of organizing a chart of accounts. The lines in your chart of accounts can be as numerous and detailed as you need, depending on what you'll need to know later on. So let's take revenue as an example. So you can break down the idea of revenue into smaller chunks, like earned revenue, which is all of the money you earn from your programs and other services you provide; contributed revenue for all of your grants and donations; and investment revenue for interest on any savings accounts you have. And then you can break each of those down even further. So earned revenue might have detail lines like ticket sales, workshop fees, tuition revenue, etc. And these lines should be aligned with your organization's programming. When you're setting up or reviewing your chart of accounts, the main things you want to keep in mind is what do you want to learn from your data, as well as which reports beyond the typical financial statements will be useful later on. It can be hard to know exactly ahead of time what you'll need to know, but it's worth taking some time to think about, because how your chart is set up has a direct correlation to the reports you can run from any kind of accounting software package. So you might start by thinking about any reports you need to fill out or piece of information you often find yourself reporting to your board or to grant makers. But this isn't a conversation that should just stay with you, just like we talked about with the budget process. This is a moment when you'll want to talk to your staff and board. Think about your own work, what financial information will help your board do its work, and what kind of financial analysis would be helpful to staff members. For example, if your organization has different types of programs or does work in different locations or gets donations from multiple sources, you want to think about all those things when setting up your chart of accounts. You should also consider how you need to report your data. Are there specific reports you typically need to prepare for grants? Do you fill out the cultural data profile from SMU Data Arts regularly? Your chart of accounts and your accounting system itself need to be set up to handle all of these situations. So how do you set up that chart of accounts? First, in your chart of accounts, you'll group income and expense accounts into related sets of accounts consisting of summary or parent account and then detail subaccounts. So for example, you might create the following account grouping: office expenses with subaccounts of supplies, postage and printing, and shipping. Postage and shipping and printing. Or on the revenue side, you may have a different parent account called contributions and subaccounts for individual, in-kind, corporate, foundation, government, etc. If your chart of accounts is organized into logical groupings of parent accounts and subaccounts, then you can produce reports in one of 2 formats. You can use an expanded format where all the sub-accounts with balances are shown. That's going to be very detailed. Or you could make reports that use a collapsed or summary format where sub-accounts are rolled up into their parent accounts. These two levels of reports might be good for different groups of stakeholders at your organization. For example, maybe your finance committee reviews an expanded report with all of the details, but your full board may only need to see the more summary collapsed format report at its meetings. Let's talk about how this works in the data entry process. So whether you're using accounting software or just using a spreadsheet with your chart of accounts available in a drop-down menu, this procedure is going to look the same. We'll use contributions as an example. You have your parent account and sub-account set up in your chart. And then when you're getting ready to enter the donations you receive, never link any of your donations directly to the main contributions parent account, but always choose one of the sub-accounts underneath. Notice here that those account codes I mentioned at the top are following this system. So all of the sub-accounts under contributed revenue start with the same two numbers as contributed revenue does, 4, 0. This way, later on, you can run a report on the contributions account and see all transactions under the contributions heading. Or you can run a report on one of the sub-accounts to do a detailed analysis on that category only. This list of accounts, organized into parent accounts and sub-accounts, will be the primary way you track your financial transactions. I want to take a moment here and share some advice about those account codes. I know they were a little bit intimidating, at least to me, when I was first starting to learn about a chart of accounts. So all those codes are is a numerical system to keep your list organized. So if you have ever been to a library and looked up a book using the Dewey Decimal System, you've actually used something very similar already. Following a few simple rules of thumb will help you work with these account codes effectively. So first, keep related accounts near one another. This is as simple as making sure related accounts start with the same numbers. We already talked about how all of your revenue accounts should start with the same number. In this example here, they all start with 4. Then we looked at how the parent account contributions and all its sub-accounts start with the same two numbers, in this case, 4, 0. Now, if you think about a library, you wouldn't just want to add every new book that came in at the end of the shelf because you'd never be able to find anything. Similarly, don't just add new accounts to the end of the list, but slot them in where they logically belong using the numbering system. Second, as you design your chart of accounts, leave space between account numbers so that your chart can grow later. For example, if I look at the line items for program service fees and interest savings in this example, 4,100 and 4,300, there are actually 200 different numbers between those codes. That leaves plenty of room to grow later if needed. Finally, a little earlier, I shared a numbering system that is very common for chart of accounts, 1 for assets, 2 for liabilities, etc. However, there are multiple ways that chart of accounts are set up. So you might see different versions with different numbering systems. If you pull up your existing chart of accounts and see that revenue codes start with a different number, don't panic. Unlike the Dewey Decimal System, which is kind of shared by most libraries, your chart of accounts is just for your organization. As long as it follows these simple rules for keeping things organized, the specific numbering system is less important. So we talked about adding account codes to your charts, but there are instances where you'll need or want to add more detail to your financial data beyond just this list of accounts. So one example might be your ticket sales revenue. Consistently using this account code throughout the year will help you understand your total ticket sales at the end of the year. This is really important for reporting and budgeting. But eventually you might also want to understand things with a little bit more nuance. For example, how did ticket sales differ between your fall production and your spring tour? Even if you have religiously tracked all your ticket sales revenue throughout the year using this account, you won't have the detail necessary in your chart of accounts or in your accounting system yet to make this comparison between different programs. If we don't plan for this in advance, you might end up having to go back through your records throughout the year to retroactively determine this breakdown. And that kind of additional work is what we're trying to avoid with financial data organization in the first place. There may also be other ways you want to distinguish between different types of financial data that go beyond your chart of accounts. For example, you may want to distinguish by grant, by department, and on and on. For this additional detail, you can use tagging methods within your accounting software, or even within a spreadsheet to further classify your data. So most accounting software has features to allow you to classify or tag transactions beyond just your chart of accounts. So you'll see different names for what I'm about to describe. Sometimes it's called dimensional accounting, or you might just see it referred to based on the terminology used in different softwares, things like classes, customers, or dimensions. Much like the chart of accounts, you'll want to do some advanced thinking about what you need to track, what these categories and tags are, and what terminology you will use. Then, when you record your financial transactions, you'll apply these tags in addition to choosing an account for transactions. And this will allow you to report on your finances in multiple ways. And the advanced thinking you did on this will keep things organized and make sure everyone is using different tags consistently in your accounting software. So the terminology for these tags will vary between accounting software, as I said, but since many organizations use QuickBooks, I just wanted to pause to note that a common way to approach this with QuickBooks is to use classes or subclasses for program, general administrative, and fundraising tracking, and to use customers for grant tracking. Or if you are just getting started with financial data tracking and you are using a spreadsheet, especially if you're a very small organization just getting off the ground, you can simply add a column for each additional type of tag you want to add. And consider using a feature called data validation in Excel to make sure you use consistent terminology for your tags. Now, if we think back to our budget training last week, one example we shared was a budget broken down by different programs, as well as general and administrative and fundraising expenses and revenue. This breakdown might also be familiar to you if you fill out a 990 or if you fill out the cultural data profile. We also use a breakdown very similar to this. Now, if we look at this budget layout, your chart of accounts will correspond to the line items in your budget. Here it's our revenue sources because this is the revenue part of our budget. But if we were looking lower down or in the next tab at our expenses, it would be our expense line items. This is why it's so important that I keep saying that your chart of accounts has to align with your budget, because having your chart of accounts match the line items in your budget will allow you to compare to how your plans worked out throughout the course of the year. So if the chart of accounts responds to the line items in your budget, the tags or classes we just discussed will correspond with the columns in the budget. So this is how we can create a budget like this that presents your revenue and expenses by line items and by program or function, by having both the chart of accounts as well as those tagging features that I talked about. So let's go back to our example of tracking ticket sales revenue. So here's a pretty simple system of classes and subclasses an organization might decide on to track transactions by program and function. This system would align pretty well with the budget format we just looked at. They're going to use 3 classes: program, management, and admin, and fundraising. And within the program class, they're going to add subclasses for 3 different programs that they do: their fall season, their spring tour, and their education program. So this might look pretty familiar, but this could be translated to any type of programs your organization is doing. So these classes and subclasses will work in conjunction with their chart of accounts. So for example, if they're adding a transaction related to ticket sales for their fall season to their accounting system, they would use the following account, class, and subclass. This will allow them to track that this was ticket sales revenue and that it was associated with the fall season. They could then use the same class and subclass for expenses directly related to the fall season, though of course when they're tracking expenses, they'll use a different account code. Before we move on from this concept, I did want to mention another method for adding additional detail or dimensions to your chart of accounts that you might encounter. This is called account code segments. So account code segments accomplish a very similar goal as the tags and classes we just discussed, but in a slightly different way. Account code segments are numerical codes you can add on to your account numbers, usually at the end, to further classify data by program or grant. So in this example, the organization has set up codes for their various programs, and they can use these codes to track ticket sales specifically for each program. Once they have this list of segments determined, they can add lines to the chart of accounts that use any combination of their main account code and those additional segments or codes. So this method of adding additional account code segments was very commonly used in the past. It's not used as frequently now, as it tends to make your chart of accounts longer and more unwieldy. It's a little harder to keep everything organized. And modern accounting software allows us to do things like the tags that we just looked at. So the classes, subclasses, and sort of the tagging methods we just talked about are usually considered a best practice these days as opposed to these segments. However, I wanted to mention that I wanted to mention this method because you may still encounter it. And it is possible that in existing chart of accounts that your organization is using, you might see these account code segments. If you're starting from scratch or you're kind of redoing your chart of accounts and investing in it, I would counsel you to use the features like classes and jobs for this kind of detailed tracking. But I did want to just mention this so that if you see it, you have a basic understanding of how this works. So whichever method you use, segments, classes, jobs, dimensions, or whatever terminology your software offers, as long as your data entry is accurate and detailed up front, these features can help you produce more specific reports that can help you understand how different programs or departments of your organization are performing on a financial basis. Okay, before we take time for questions, I do want to share a few best practices and things to think about as you're working with your chart of accounts. So if you don't already have a chart of accounts, or if you think you need to redo your existing chart of accounts, you don't need to start from scratch. Really consider working from a template. So we've developed a sample chart of accounts and budget template that are based on the cultural data profile lines, which I'm gonna send you in a follow-up email after this training. I'll send you an attachment, and it's an Excel file. You can see a little preview of it here. And this resource is designed to allow you to start from the line items included in the cultural data profile, which of course we've done some thinking about and hopefully represent as broad a range of different organizational activities as possible. But even if you start from this, you'll then want to modify that list to suit your organizational needs. Even if that resource that I'm going to send you is not a good fit for you, a simple internet search of nonprofit chart of accounts will give you lots of options, including Excel templates you can download. There are a lot of different ways out there that you can sort of start from a template. Just like working with a budget template, find a model you like, but don't just use it right out of the box. Make sure you modify it to suit the needs of your organization in conversation with your staff and board. If you prepare a budget, we hope that you will after last week's training and all the great information that Monica delivered. But if you prepare a budget, make sure the lines on your budget correlate to the lines in your chart of accounts. In the Excel template I'm going to send you, we've combined our chart of accounts and budget template into one spreadsheet to help you keep the two aligned. But even if you aren't using our template, this alignment is essential and will make it possible to generate budget to actual reports throughout the year. If you've created a chart of accounts in Excel, once you're happy with it, most accounting software packages will allow you to import your Excel chart of accounts into the software so it can be the basis of your accounting rather than the default the system gives you. I also want to stress here that even if you're a small organization and you currently use a spreadsheet to track your financial information, you can still set up a chart of accounts, and you should. This will allow you to keep your financial information more organized. It'll be more easy to retrieve information and develop basic statements from your spreadsheet. It may also make a transition to accounting software down the line much easier if your organization grows. Whether you're using Excel or any software for your accounting, you can always modify your chart of accounts at any time, but it's worth thinking about when and how you'll do that. So let's say your organization is a theater, and over the course of the year, you have a season of shows. And in a way that's pretty common, you sell single tickets to individual shows, but you also add a subscription package to all the shows in a given season. Now, as the money comes in, you could record it all as ticket sales in your accounting software, but sometime over the course of the year, after you've added this subscription package, you might be working with your staff to see how much of your advertising budget you should spend to attract new subscribers and how much you should spend to attract single ticket buyers. Now, if you don't have a way of differentiating between the two pools of money, single ticket sales and subscription sales, it's hard to tell how financially successful each program has been, or even begin to know where to spend your advertising dollars. Now, that is the moment when you might create a new line in your chart of accounts for subscription sales. And from that moment forward, when you do your data entry, you start tracking the two types of ticket buyers separately, so you have the data you need for analysis later on. In terms of making changes like this to an established chart of accounts, here are a few things to think about. First, you have to decide when to make the changes. And if you decide to track things differently in the middle of your year and immediately add some new lines to your chart of accounts, you have to decide if your need for detailed data is so pressing that you need to update old transactions to take advantage of the more specific lines, or if it's sufficient to just track data in more detail from that moment forward. No matter when you make the change to your chart of accounts and track more detailed data in your accounting software or spreadsheets, until you have a couple of years of financial data using the exact same set of lines, you won't be able to make true year-to-year comparisons because two different systems were in place. Especially if you are a new or growing organization, you may want to set up a procedure for making changes to your chart of accounts. Collect feedback from anyone who uses your financial data about the lines and sections of your chart of accounts and changes they would like to be made, maybe over the course of the entire fiscal year. And then, as you finish one accounting year and close your books, designate that as the moment to make any and all changes to your chart of accounts. One caveat about all of this is really important is that having a very detailed and specific chart of accounts can be useful, but you want to make sure that the level of detail you have is useful instead of being merely interesting. I'm sure all of you have had the experience of working on a data collection system or tool, maybe a survey. And when you're first designing that tool, it's very exciting to brainstorm pieces of data that you could collect. You maybe ended up with a very, very long survey that not many people wanted to fill out. Then when you went to look at the survey results, you found that you actually only used one or two of the questions to make a decision or put in a grant report. Make sure to check in with staff and board about the data they really need for planning and to think about what data you need to provide to others for grant applications or other projects. For every addition or line in your chart of accounts, make sure everyone is on the same page and can answer questions about the specific uses or needs for that data. Otherwise, you might be tempted to overcomplicate your system without really knowing how you'll use that data in the future. And finally, take the time to review your chart of accounts periodically. You may find that you have accounts you haven't used in a while and are unlikely to use going forward that can be archived. So here's what we've learned about creating a chart of accounts and some ideas for making it work for your organization. Coming up with the right chart of accounts for your organization might take trial and error, and the time it takes might seem like a luxury, but it's time well spent because having well-organized data that actually tells you the things you need to know will help you do things like learn whether a particular program was financially successful, generate the financials needed for a grant report, analyze your contributions by source and by dollar amount to help you plan next year's fundraising activities, help you plan a better budget for next year, and many more. Get your staff involved from the beginning. You need their buy-in because they're critical to making systems work. Make sure all staff members who interact with the financial side of your organization have a copy of your chart of accounts. Create internal systems for handling payments and revenue receipts that track back to your chart of accounts. That means every time you or anyone buys something for the organization or pays a bill, on the receipt or on the invoice, we're going to at least the account name, like supplies or electric bill, and more detail, including the relevant account numbers if possible. Again, if everyone has a chart of your accounts, has a copy of your chart of accounts, this will be much easier. If you can get people in the habit of doing this kind of jotting down of information as receipts and bills and things like that come in, this will lead to more accurate data entry and better reporting later on. Use accounts and sub-accounts in your chart so you can produce summary and detail reports. And use features like account code segments, classes, jobs, or dimensional tagging so you can analyze your data in many ways when you need to. And finally, let's acknowledge that all of this meta work does take time getting yourself organized, and it's not nearly as much fun as running your programs, but it's an investment in the future of your organization. So what we've done in this session is cover two key building blocks of financial management: keeping your financial data organized and using a chart of accounts to organize and make the most of your financial data. This session builds on the information we covered last week with Monica about the annual budgeting process. As we said at the beginning of the session, this was a very basic overview to get you started. Depending on the complexity of your organization, you may find yourself needing more resources. We want to recommend a couple. StrongNonprofits.org is a resource from the Wallace Foundation, produced with FMA, or Fiscal Management Associates. They have an overview of financial operations, which is maybe targeted at mid-size or larger organizations who may have a CFO, but it may be helpful even if you are from a smaller organization to understand the scope of financial management activities at a slightly larger organization, especially if you think you might grow over time. We didn't really get into how to track restricted revenue today. So if that is something you have at your organization, I recommend this resource from Propel Nonprofits. And finally, I know from talking to arts leaders over the years and from being a volunteer at small nonprofits myself, that many people who are organizing financial data at nonprofits are self-taught, don't necessarily have accounting degrees. There are countless resources on topics like bookkeeping or QuickBooks, etc. If you have any resources that you personally have found particularly helpful, I really encourage you to put them in the chat. And they can always be really helpful to see from your peers, what you're learning from, what you're turning to, especially with accounting questions. So before we transition to questions, I do want to share with you a few data arts tools and resources that offer you different ways to work with and gain insight into your financial data. So first, if you don't already do so, consider filling out a cultural data profile, or CDP. This survey is based on your final financial statements. Once you do the data entry, which is only once per year, your data can be part of a grant application for participating grant makers, and it will also be a part of research reports offering insight into the national arts and culture scene. If or once you've entered at least 1 year of data into the cultural data profile, you have access to a full suite of reports to help you analyze your trends in a number of areas and benchmark your organization to others. These reports also allow you to have ready-made data and visuals grouped around specific topic areas for your board meetings. Finally, if you want to learn more about using data in general, we've also developed a series of free online courses meant to help you learn to use data more effectively. There are 4 courses currently available, and they cover specifics of how data can be useful in different areas of your work. You'll see them listed here. SMU Data Arts also regularly publishes white papers. One of our most recent white papers that just came out is called The Intersection of Funding, Marketing, and Audience Diversity, Equity, and Inclusion. This research examines if and how donor priorities and things about an organization, like its location, subscriber base, or marketing actions, it determines to the extent to which audiences represent the diversity of the organization's community, and how that audience diversity correlates to those funding and marketing things about an organization. It's really interesting research, so I encourage you to check it out if you have a moment. We'll be able, I think we're going to put a link to that in the chat so you can access that report. We also have a number of online videos available on our video page. Our recording of this webinar today will be up on our page, and we'll send you a link to it after the session. But you can also click around on that page and see a lot of different resources about financial management and financial topics. And as we shift into our time for questions, I do want to share a friendly reminder about our final webinar in this building block series, Metrics and Working Capital. It's going to take place next Tuesday, July 27th at 1 p.m. We'll see you back here. We will also put a link to register for that next section in the chat, and we hope to see you. Great. So that brings us to the end of our presentation for today. So we do have time for questions. So I'm going to go ahead and pull up the questions. I don't see anything in the Q&A, but I'll give people a few moments. If you have any questions at all, please feel free to put them in the Q&A and we can go ahead and address them. And I'll go ahead and check in with Eamon. Eamon, were there any questions that came up while I was presenting that we should discuss?
Hey, Katie. No questions. People did, report on their positions, which was very nice to see. But at this time, no questions that have come in. And I did just put a few links in the chat for people that are curious about those.
Wonderful. All right, great. Okay, well, Again, that does wrap up our presentation for today. I think what we'll do is we will end the audio portion of our webinar. And if you don't have any questions, please feel free to, get back to any financial tracking or anything else you need to do. But if we'll give you 15 minutes back of your day. But if you do have a question, we'll stick around so you can put that in the Q&A and we'll answer your questions via chat. So again, thank you all so much for joining us today. I will be sending you an email with a copy of the recording, the slides, as well as that template I mentioned for the chart of accounts that's based on the line items in the CDP. So keep an eye out for that. And again, thank you all so much for attending.